Hello students, I'm Vipul Mittal. In this session, I will discuss a multiple choice question on other information. Now, what is other information? It is information that is included in the entity's annual report. This information is information other than financial statements and the auditor's report. And this information may be financial or non-financial. So three things. Let me write this. So this is included in the annual report, and this is other than the financial statements and the auditor's report. And also this may be financial or non-financial. All right. Now, what's the question? If the auditor concludes that a material misstatement exists in other information obtained prior to the date of the auditor's report. So a material misstatement exists in other information, and this other information is obtained prior to the date of the auditor's report. And this other information is not corrected. This remains uncorrected after communicating with those charged with governance. So you are the auditor, you are auditing the financial statements, and you come to know of a material misstatement in other information. You communicate this to management and those charged with governance, ask them to correct it, but they do not correct it. It remains uncorrected. What you should do? The auditor may do one or more of the following. Except what? You have four answer options. What you would not do? So there is a material misstatement in other information. You have obtained it prior to the date of the auditor's report. This other information is communicated to management and those charged with governance, but remains uncorrected. What you would not do? Consider the implications for the auditor's report. Will you consider the implications for the auditor's report? Answer is yes. You certainly would. You will see the impact on your report. You may include a statement in the other information section of the auditor's report. So you may describe this in the other information section of the auditor's report. So you would consider the implication on other information section of the auditor's report. And in the other information section, you would describe this situation that there is a material misstatement in other information. Sometimes even disclaimer of opinion may be appropriate. So you have to consider whether I should disclaim an opinion on the financial statements. So you may consider disclaiming an opinion, but this may happen in rare circumstances. A disclaimer of opinion may be appropriate in rare circumstances. For example, you have informed management and those charged with governance of this material misstatement of other information, but management and those charged with governance refuse to correct that material misstatement in other information, and this really questions the integrity of management and those charged with governance. And it questions the reliability of audit evidence in general. Then you may consider disclaiming an opinion also. Yes, you will consider the implication for the auditor's report. Option B, withhold the auditor's report. Yes, you may withhold the auditor's report. because you haven't yet signed the report. You come to know of this material misstatement prior to the date of the report. The report is still with you. It is not yet signed by you. You may decide not to issue the report. You may decide to withhold the report. Yes, that's okay. Option C, withdraw from the engagement. Yes, you may withdraw from the engagement if withdrawal is possible. If withdrawal is possible under laws and regulations, you may withdraw. You have to check whether withdrawal is appropriate or not. So you come to know of material misstatement and other information. You inform management and those charged with governance, but they do not correct it. It really puts a question mark on management's integrity, integrity of those charged with governance, and it questions the reliability of representations made by management. Yes, you may decide to withdraw. You may withdraw from the engagement. Option D. Take appropriate action to seek to have the uncorrected material misstatement appropriately brought to the attention of anyone in receipt of the financial statements and the auditor's report. I don't think so. You would do that. You are the auditor, you are auditing the financial statement, but you haven't yet signed the auditor's report. You come to know of material misstatement and other information prior to the date of the auditor's report. Before the date of the auditor's report, you haven't yet signed it. Certainly not given the auditor's report to management for release. So your report is not released to public. So this step actually is not needed because your report is not yet released. It is still with you. It is still with you. It is not released. So option D is quite unnecessary. Option D is your answer. So you would do all of these, but you would not do option D. You would not take action to have the uncorrected material misstatement brought to the attention of anyone in receipt of the financial statement and the auditor's report. This is not required. All right, students, I hope this is helpful. We'll connect again. Goodbye. Take care.